Here we are on location in Las Vegas, Nevada for this month's Quick Start Real Estate School.
And here I am sitting at Lynette Wolf's desk that she uses to call sellers on. All these leads that were brought in. So her and her husband out here calling them, and this is her desk. So, all right, so how many questions we got this week?
Okay, we have about 6 questions.
All right.
So the first one is from Todd in Ohio.
Todd?
And he has a question. He has a buyer who wants to use a loan from their 401k for their down payment.
Okay.
And according to Todd, he's heard you mention it many times, but he wants to know what form does he use for the required 401k.
Todd, that's something that your buyer has to ask the 401k administrator, not me. That's up to them to provide. So they send the forms to your buyer, they fill them out, they send them back, and then your buyer's got to tell them where to wire the money, which is to your closing agent. Okay?
All right.
Next question.
So the next question is from Thomas in Michigan.
Thomas?
When taking over a home subject to, what needs to be done about the insurances, if any, on the home?
Okay. Now, of course, Thomas, there probably ain't more than 6 lessons on this on the Go Club, but I'll answer it again. When you take title, you have to get your own non-owner occupied insurance policy on the house. You should have that the day you take title, and you got to pay it a year in advance. We use NREIG. NREIG. I don't know how to tell you to reach them. Look them up on the web. They will cover your non-owner occupied property. They'll save you a bunch of money, and they really don't care how you take title. So check them out. You're going to have to get a non-owner occupied policy. You're going to have to ask your insurance company to make sure that the mortgage that's on the house is the first mortgagee. And if you have done a wrap to the seller, then the seller is the second mortgagee. And then you got to make sure that your insurance company gets that policy to the lender and ask them to cancel the underlying policy. If that's an issue, then your seller has got to contact the lender and ask them to cancel the underlying policy, but only after they get the new one that you put on the house. Okay?
All right. And now our next question is from Fernando in Connecticut.
Fernando.
Nice to hear from you again, Fernando. And his question is, he was contacted by the Connecticut Department of Real Estate regarding his website. They say he has the Dreams package, and they say it appears that he needs to have a license to sell real estate.
Okay, Fernando, I don't know if you've been to the training or not. If you haven't, you better get here, because there's something on your site that prompted him to call you. I wouldn't be surprised if it doesn't say something like, we sell houses. If you put on there, we sell houses, and you don't also put that you're a licensed real estate agent, you're going to get a call. Since I can't see your website, I don't know what it is. But I will tell you, you better be careful about communicating with government agencies without your attorney involved. But, you know, I wouldn't mind if you asked them, what is it you see on there that prompted you to call me? Because I'm not a real estate agent, I buy houses. Okay?
Okay. Hopefully that'll help out Fernando.
Yep. If it goes any further than that, you get an attorney, sir.
The next question is from Chris in South Carolina.
Hello, Chris.
If I get a purchase agreement with a seller on an exact wrap where the monthly PITI and interest rates are mirrored to the underlying loan, can I put a balloon of, say, 5 years for the terms if I am assigning my interest off to a retail buyer?
You can put a balloon anytime you want. It's between you and the seller, but I don't know why you would want to. We don't ever put a balloon in there unless the seller forces us to. Don't be bringing that up with a seller, because you got a whole lot better deal if there's no balloon in this wrap. That means you got the whole time of the underlying loan to pay it off. So again, do not bring that up. Let them ask you, oh, how long is it going to take? And then you should say, well, we usually get 30 years. And then if they say, I don't do that, well, then what is the most you can give me? At the very least, give a long term, not a short term. Much easier to sell with a long term than it is short term.
Okay, and the next part to Chris's question is, this is a contract between the seller and another owner-occupying buyer. Does this agreement then fall under the Dodd-Frank exemption?
God, I want you to forget the words Dodd-Frank exist. They do not apply to you, but I'm a little confused how you got an agreement between the seller and the buyer. You don't have such agreement. You got an agreement between you and the seller, and you're assigning that agreement to the buyer. So your question is false on its surface. And Dodd Frank has nothing to do with it. Dodd Frank has nothing to do with lease options or assignments.
All right, and the next question is from Mark in Florida.
Mark?
Mark is down in Boca Raton area, and he comes across a lot of 55-plus communities.
Right.
He was wondering what you thought about how ownership works if someone under 55 can own that type of property.
No. The docs, the association docs say no, and they're probably going to make the proof it. So no, you can't just ignore the rules. You got to live with them. So if you buy a property in there, you got to sell it to somebody over 55. There's plenty of us old people around. Shouldn't be that hard to find.
55 is not that old
No,
either.
it's not old. In fact, I used to think it was. Now it's very young.
Yes.
Yeah.
Okay, so the final question is from Lon in Maine.
Hello, Lan Mi.
I'm a term student and recently generated a lead who is interested in the terms in Massachusetts.
Right.
The minimum price is $2 million. However, the seller wants Lon to provide references and potentially talk to these people if possible. How does she respond to that?
Well, I don't know, because I don't know what your training is, and I can tell you right now, if you don't have a mentor, one of our mentors working with you, I probably would not work on that deal because there's no chance you're going to pull it off. And there's a lot more to this than that. On that house, I'd want you to reverse your risk, and I don't want you to make any promises you can't keep. And if they want somebody else to talk to, that's where your mentor comes in handy. So I don't know what else to tell you other than that. You're not going to pull that off on your own. You have very, very limited training.
All right, so that...
Who's this?
You're in my office.
Okay.
We did it.
Okay,
You
so
recognize that squeaky voice, don't you?
that concludes...
Come over here, Lynette.
the-
Get your face in here.
Oh my God.
Hi.
All right, there she is.
Okay,
They are.
so that concludes this week's Ask Ron on location in Las Vegas.
All right.
Let's go see some shows.